Tesla Throwback Thursday. Today we take a look at Tesla's Q4 and full year 2021 financial results and Q&A webcast. With the release of Tesla's Q4 and full year 2023 results, I felt it was only fitting. On January 24th, 2024, Elon and the gang may reveal some forward-looking statements. To get an insight on what may occur, we gotta look back into the past and see what they've done prior. So without further ado, let's get to it.
Good afternoon, everyone, and welcome to Tesla's fourth quarter 2021 Q&A webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. So just to recap, 2021, it was a breakthrough year for Tesla and for electric vehicles in general. We managed to grow our volumes by nearly 90% last year. This level of growth didn't happen by coincidence. It was a result of ingenuity and hard work across multiple teams throughout the company. Additionally, we reached the highest operating margin in the industry in the last widely reported quarter at over 14% GAAP operating margin. $5.5 billion of GAAP net income in 2021. Our accumulated profitability since the inception of the company became positive, which I think makes us a real company at this point.
You can say that again.
Which I think makes us a real company at this point. This is a critical milestone for the company. So after an exceptional year, we shift our focus to the future. So we've begun production at both Texas and Berlin. We started that last quarter. But that's not the most important thing. We're focused more on when to get to volume production. In Texas, we're building the Model Ys with the structural battery pack and the 4680 cells. Capacity expansion will continue through maximizing output of each factory and building new factories in new locations in the future.
It's definitely one of my top 5 questions. Where are the next gigafactories going to be located? And the timelines for when these things could possibly be constructed.
We do expect significant growth in 2022 over 2021. Comfortably above 50% growth in 2022.
Well, maybe not well over, but 2022 year-over-year revenue did exceed 50%.
Full self-driving. So over time, we think full self-driving will become the most important source of profitability for Tesla. I mean, actually, if you run the numbers on robotaxis, it's kind of nutty. I'm completely confident at this point that it will be achieved. My personal guess is that we'll achieve full self-driving this year.
Yeah, of course. It'll be achieved this year, or next year, or the year after that. But it will be achieved.
The cars in the fleet essentially becoming self-driving via software update, I think might end up being the biggest increase in asset value of any asset class in history. On the product roadmap front, there's quite a lot to talk about. I'm not going to go through every sort of thing that we're working on because I think a lot of them deserve product launches of their own. The fundamental focus of Tesla this year is scaling output. If we were to introduce new vehicles, our total vehicle output would decrease. This is a very important point that I think a lot of people do not understand. If we had introduced, say, a new car last year, our total vehicle output would have been the same because of the constraints, the chips constraints particularly. So we will not be introducing new vehicle models this year. It would not make any sense.
Closing out 2021, it was the chips that were in limited supply. Fast forward to now, we're still a little battery supply constrained. Introducing a new vehicle is not as easy as Tesla makes it look.
However, do a lot of engineering and tooling and whatnot to create those vehicles, the Cybertruck, Semi, Roadster, Optimus, and be ready to bring those to production, hopefully next year. In terms of priority of products, I think actually the most important product development we're doing this year is actually the Optimus humanoid robot. the foundation of the economy is labor. So what happens if you don't actually have a labor shortage? I'm not sure what an economy even means at that point. Drew, do you want to talk about the 4680 program?
Throughout 2021, we focused on growing cell supply alongside our in-house 4680 effort to provide us flexibility and insurance as we attempt to grow as fast as possible.
We still expect to be part or primarily chip limited this year. That chip limitation should alleviate next year, and then probably we transition into a cell limitation, battery cell. It's total gigawatt hours of cell limitation, which is when the 4680 will become very important.
As the prophecy was foretold, the chip shortage has alleviated, and now we've entered a cell constraint. Tesla's ability to foresee challenges and then tackle them is absolutely why I'm all in on this company.
As Elon mentioned, 2021 was a financially transformative year for the company. If we look across the full year 21 and compare that to 2020, our automotive gross margin, excluding credits, rose by over 600 basis points, enabled by work on cost reduction, utilization of our Shanghai factory for exports, and accelerating demand. Over a longer-term horizon, we are quite optimistic about the expansion of margins, though. From the hardware side, we are aggressively driving manufacturing innovations and operational efficiency to reduce cost. And with the rapid development of FSD, software-based profits will ultimately become a strong addition to the profits generated by selling hardware.
So let's go to the Q&A from the investor side. How is the progress of the $25,000 compact car? Can you give an update?
We're not currently working on the $25,000 car. At some point we will, but we have enough on our plate right now. Too much on our plate, frankly. It's sort of the wrong question, really. It's really the thing that overwhelmingly matters is when is the car autonomous?
It's tough to think about the demand that would follow a $25,000 Tesla. With those current supply chain shortages looming, battery constraints on the horizon, you're looking at a wait list that would be triple that of the Cybertruck, and delivery times probably extending over a year. Let Tesla get their ducks lined up in a row. They've gone through more than a few product launches already, learning valuable lessons from each. Dare I say, the next-gen vehicle launch, that's be smooth as butter, baby.
The next question from investors is, since we're talking product roadmaps today, how do you view domestic cooling and heating in the context of accelerating the sustainable energy transition? And how might Tesla's HVAC and heat pump advances fit it?
I think from a mission perspective, it's very aligned. If you imagine replacing natural gas, water, and space heaters with electric heat pumps, it offsets something equivalent to like 80% of what a solar plus Powerwall system would offset. So it's very impactful. And we have learned a lot about how to make capable and reliable heat pumps that work in all environmental conditions, and are excited about the idea of working on that problem one day. We put it that way. It's definitely aligned with our mission to accelerate the transition to sustainable energy.
Drew's excitement is palpable, as is mine. I can't wait to get on a wait list to have a Tesla heat pump installed in my domicile. I like all these things to match. Tesla solar, Tesla Powerwall, Tesla vehicles in the garage, Tesla heat pump heating my home. One day, I can't wait.
It becomes quite a compelling solution to the consumer, where you integrate electric vehicles, charging, solar, energy storage, hot water, HVAC, in a very tight, compact package.
We've been doing with Powerwall and charging solar is integrating them more and more.
Yeah,
the next logical step is obviously HVAC and water and heating. So we will do that, and we will integrate it probably better than anyone has. But as you said, we have a lot of stuff on our plate.
Yeah.
You're damn right.
The next question is, would you consider splitting FSD packages into perpetual and term licenses with a higher tier for both options for commercial use? A perpetual license could be attached to individual or business and not the vehicle itself.
No, I mean, it sounds maybe too complicated. Maximize the efficiency of getting people from one place to another. Charge them in a sensible way.
including the charging infrastructure. That's a big part of it.
Yeah, exactly. Charging for money and charging for energy.
Is Dojo on track for summer 2022? And what challenges, if any, are you working through? Is Dojo necessary for FSD to operate better in cities like New York City? Or on a separate note, where should we expect the first implementation of Tesla bots in your factories?
Two questions in there.
Big six questions.
Yeah, Dojo appears to be on track for doing something useful in the summer of this year. When does it become more competitive than a GPU cluster for training? The FSD team running our GPU supercluster needs to tell me that they want to use Dojo instead. Dojo is not needed for full self-driving, a cost optimization on training vast amounts of video data. We're not saying for sure Dojo will succeed. We think it will. We would encourage those who think this is an interesting problem to join Tesla. The first use of the Tesla bot, Optimus. The Optimus name seems to be sticking, at least internally. If we can't find a use for it, then we shouldn't expect that others would. So the first use of the Tesla Optimus robot would be at Tesla, kind of like moving parts around the factory or something like that.
On insurance, when do you plan on having your insurance service rolled out in all the states? International rollout timing in markets that have Tesla insurance, what kind of uptake rates are you seeing?
We currently offer Tesla insurance in 5 states in the U.S. 4 of them are telematics, which is Texas, Illinois, Ohio, and Arizona. And then California, which has a more standard insurance offering based upon regulations there.
We've just switched over from USAA to Tesla Insurance. For similar coverage, it wasn't much cheaper. Like I said before, I like my to match.
We see that so far in Texas. Take rates have been quite strong. We measure this on the conversion rate from when folks quote to see what their monthly rate would be at the starting point to what percentage of them purchase. So we're very encouraged by the interest that we're seeing in Texas. And then we've had enough history in Texas to see what does the loss ratios look like and how do the economics of the program work. And, we're on the right track there as well. So we're comfortable with what we've seen in Texas to move as quickly as we can to scale this across the U.S. Specifically on the question about when we will be in all states, this is a slow process because of insurance being regulated at the state level. And so we have to go through each of those processes with each of the departments of insurance at each state. But our internal goal here by the end of the year is to be in enough locations that 80% of our customers within the U.S. Could choose to sign up for Tesla insurance if they wanted to. There's a lot of uncertainty around that based upon the regulatory processes, but that's our goal. And then as we make more progress rolling out in the states and each incremental state becomes a little bit less effort than the prior, that's when we'll turn our attention to the Europe market. We might be able to do that by the end of the year, starting to get work on Europe by the end of the year. We'll have to see how we progress in the US.
What is your expected max capacity from each of your current factories, Fremont, Shanghai, Berlin, and Austin, and timing for new factory announcements?
It's always possible to increase the output of any given factory. So you say, well, what's the max capacity? Well, it's difficult to say what that max capacity is because if you put a lot of effort into it, you increase capacity quite a lot. So even if you could increase output, it may not actually be the smart thing to do.
What are the biggest obstacles for Cybertruck volume production besides battery shortage?
Batteries will probably not be the limiting factor in Cybertruck production. There's a lot of new technology in the Cybertruck that will take some time to work through. I'd worry more about how do we make the Cybertruck affordable despite having all this awesome technology. That's the thing that will really set the rate. Aspirationally, we'd like it to, in terms of just a rough order of magnitude, we'd like Cybertruck to be at least on the order of 250,000 vehicles a year.
How many Cybertrucks? 250,000 Cybertrucks. If Tesla's able to find a way to get that thing under $50,000, piece of cake.
How much of Tesla's margin improvement is from, number one, economies of scale, number two, production line design efficiencies, number three, reduced transportation costs from multiple plant locations, and number four, Pricing versus cost inflation, or number 5, other sources? And how much further could margins improve and why?
There's basically 4 major factors if we look over the last year to the margin improvement in the company. And they're in no particular order here, but these are the big ones. So our mix of Model Y is increasing, as we've ramped that to higher capacity in Fremont and also in Shanghai. And the reason that matters is the Model Y is a vehicle that carries a higher profit than the Model 3. The second one here is localization in Shanghai has been a huge help for margins for the company. If you recall at the beginning of the year, we also were in a transition to the new version of the Model S and Model X. And so as that has ramped over the course of the year, that has been helpful. And then we've also done various price increases in certain markets on certain models, which has helped there. Where that nets out is hard to say in the immediate term. And we obviously as a company are going to be driving to increase margins as much as we can. But I just want to be realistic that we're launching 2 factories simultaneously here, and it unavoidably will add cost to the business as we do that. As we look further out, and Elon mentioned this in his opening remarks as well, the software portion of the business, I think, is the one to really pay attention to. As full self-driving features get rolled out to more and more folks. I mean, for me personally, I prefer to drive my car with the FSD beta on.
You and me both, Zach. You and me both.
I think as more and more people experience that, take rates there, and then as we work towards the robotaxi space, there's actually quite a bit of upside on margins from a software perspective.
Can't wait to see that deferred revenue become actualized on the balance sheet. Yeah, no doubt.
Everything pales in comparison to the value of a robotaxi or full self-driving. I mean, that just tends to overwhelm everything.
Elon mentioned level 4 autonomy could be achieved this year. Is it based off initial FSD beta rollout experience, or is level 4 ability predicated on Dojo being complete and online?
As mentioned earlier, Dojo is not required for full self-driving. It's kind of like the March of nines of reliability. Is it 99.999% reliable or 99.999999%? This gets nutty. So we obviously want to get to as close to perfection as possible. Frankly, being safer than a human is a low standard. People are very, very lossy, often distracted, tired, texting. Anyway, it's remarkable that we don't have more accidents. I mean, how do you be 1,000% better or 10,000% better? But I think anyone who's been in the FSD beta program, I mean, if they were just to plot the progress of the beta in interventions per mile, it's obviously trending to, a very small number of interventions per mile.
The caveat of safer than a human, I'm not so sure what exactly that means or how we'll know that. This is the beginning of 2022. And that same verbiage he used to talk about FSD could be applied right now. It is literally a march of nines. And there is no question that the FSD beta today is tons better than the FSD beta a couple of years ago. Question is, can it be 10 times safer or 100 times safer than the average human driver? In many respects, it's already better than your boy.
Elon, I guess my question's around the Megapack or your energy business. So I was wondering if you could just talk about the supply chain and LFP for the Megapack and what we should expect for that.
To be clear, we do think that all stationary storage, Powerwall and Megapack, will transition to an iron-based system, basically a non-nickel system. Manganese is also, could be part of the future, but primarily iron. Long-term, probably terawatt-hour per year energy business. Yes. So a lot. It's been very vast.
22 is kind of the opening of that, the energy business re-accelerating.
I mean, the goal is definitely to grow it this year.
It'll grow this year, yeah, for sure.
I think it's exactly that. I mean, it's a question of does it double, triple, quadruple? I mean, either way, I think our plans are pretty ambitious for Megapack this year and storage in general.
Yeah,
The exact amount of growth is hard to know.
grow like kelp on steroids, basically, down the road. It needs to.
I was wondering on the R&D front, because like you said, you have so many fish frying. How do you organize the R&D, efforts, so that you can, start talking about all these new products? Is there like an incubator or some type of thing like that? But just structurally, I'm curious about that.
We don't have incubators.
Or research centers.
We don't have research centers.
We're in it.
Yeah.
We work on things that go into our products.
Yeah, we're like, this is a useful product that the world really needs, and we're just like, let's make this thing, design it up and iterate fast and then figure out how to make this at scale at a reasonable price. That last part is the super hard part. As I said, prototypes are easy, production is hard. If we could whip out a zillion prototypes, but what's the point of that? You actually reach scale production and exceed cash out. That's the super, super hard part.
We don't think of it as R&D and then like the product development. It's just one one go to just make great products.
Just in general, societally, there's way too much value placed on the idea.
Ding, 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 ding! Tell him what he's won, Johnny! Your mother. Right. Ideas are awesome, but if everyone's coming up with ideas and no one's executing those, well, ideas are worthless.
Like, you can have the idea of going to the moon. That's not the hard part. Okay, going to the moon is the hard part, by far. And the thing is that is true for really most products. So there's just way too much value placed in the idea of versus execution.
You spoke a lot about FSD and how the economics could be very attractive going forward. I'm wondering if you could just share what your current attach rate might be for FSD on your vehicles, or how to think about the progress of your attach rate or revenue in FSD, let's say in 21 versus 20, and how much deferred revenue for FSD was drawn down during the year. And I have a follow-up, please. Thank you.
FSD stuff, you really don't want to be looking in the rearview mirror. It will not be a good indicator for the future. So you need to look out the front windscreen because it is such a profound step change. I don't actually know how to quantify that financially, except that it's some big number.
Okay, thank you for that.
That was one of the biggest dodges ever. Basically saying that they're not going to divulge that information from the deferred revenue of the FSD software, nor give you exact figures on how many vehicles actually have the FSD on them. When they talk about real world FSD miles driven, you kinda get a glimpse of how many cars actually have the software engaged. And Tesla's not going to hold your hand in this process. But like Elon says, you gotta look through the front windshield. The financial implications are really some big number.
$25,000 vehicle being worked on. Is it really realistic to think that you can sell more than 3 million vehicles with 2 very high volume cars and Cybertruck in 2024? Or how do we think about that, or what else is missing in that equation?
Did you hear that chuckle right there? That's a chuckle of an individual that is laughing at someone who has no idea what they're talking about.
Yeah, I mean, it is apparent from the questions that the gravity of full self-driving is not fully appreciated. Basically, if the cost of our cars does not change at all, we would still sell as many as we could possibly make.
I understand well the ramp at 4680 internally, but I'd be curious to hear you talk about how you think about 4680 as being a form factor that your suppliers could adopt as well. What does 4680 become? Is it going to be outside of Tesla the largest form factor for batteries? Is it something that you guys are going to to deploy in all cars, whatever the chemistry, also in the Megapack, in all your energy storage business? And do you expect eventually a lot of other companies to use that form factor as well?
On the 4680 as a form factor, yes, we've engaged with a number of our partners, our suppliers on the form factor, and they're all working on it. To the question about should everything be 4680, it doesn't have to be. In the end, it's about cost competitiveness, scalability of manufacturing. And when you compare like a iron cell with a nickel cell, for example, like there are some just physics-based differences in what happens in certain corner cases that would drive different form factors. And we just have to be cognizant of that and design to that. So it isn't like the ultimate form factor for all things. There's other form factors that could be better for an iron cell, for example.
And should we understand from the situation today that you're working very hard also at expanding the scope of your suppliers? And should we expect like Tesla to take on board additional suppliers in the near term, especially on the power side?
Well, last year was chip hell of many chips. So silicon carbide inverters were certainly one of them, but
honestly, there's a lot of annoying, very boring parts.
Yeah, it's a ton of very simple control chips that run of the mill, literally,
Right.
a little chip that allows you to move your seat back and forth. It actually was a big problem. Couldn't make seats.
I mean, on a go-forward basis, right, the idea is to continue to drive simplification. So there are fewer unique parts, fewer of them. On the power side in particular, it's still like an area of like technological development where, the next chip can do the same thing with less die area. So like the total fab required to accomplish the function goes down. So there's still room to grow without needing more fab capacity. But in general, there's a lot more fab capacity coming. So that's like a win-win there.
Yeah.
And there you have it, Tesla's Q4 and full year 2021 financial results and Q&A webcast. Hopefully you can garner some insight on what the future may hold, especially on January 24th when Tesla divulges their projections for the year of 2024. That's all I got for you today. Professor Hustle's office hours are in the comments below. Be easy. Peace.